This fund is one of my sleeper funds for both dividend growth and growth of your portfolio because those are both important. You cannot just focus on dividends alone. I've learned that over the past year in 2025, doing a lot of yield chasing and realizing that, yeah, the dividends or the distributions may be high, but at the expense of the NAV. And I can't have that in my portfolio. There's a lot of people that are okay with that because they're solely focused on income. But for my preference, I need growth and income because I follow a buy, borrow, die strategy as well. So I borrow from my portfolio to pay my bills. I need my portfolio to go up, which allows me to borrow more money and also use margin to invest in other assets. Like, for instance, I will be investing in a business. So I need $6,000 to pull out of my dividend portfolio. So that's the only reason I borrow margin is to one, pay expenses, pay off my credit cards, and two, borrow to buy another asset or investment that's going to generate more income. But again, my preference is I need income and growth. And I took a hard lesson in 2025 to realize this. If I didn't do what I did last year, I would have been in a lot better spot. So, but before I tell you about the fund, let's do a recap of my portfolio. It is January 26th. It's almost the end of the month. So happy first month of 2026. It's been quite eventful with a lot of stuff going on in the news, but we're here to talk about money. So my portfolio sits at $149,389 as of the making of this video. Total gain, $4,262.71, and a market gain of $2,831.57. Dividends earned $1,431.14 with a money weighted return of 2.96%. And this is the year to date information. So looking good. Anytime it's going up, that's great. And I think because the market gain is a reflection of the change in my strategy by some of my newer investments that I added to my portfolio late last year. So the fund that I want to talk about today is VXUS, Vanguard's Total International Stock ETF. It's one of the most underrated dividend growth funds out there because it's more focused on growth. But what VXUS is, it gives you exposure to over 7,000 companies outside of the US. I mean, look at what's going on right now with the tariff talks, and then the basically the world is actually creating new deals with each other. For example, Canada and China. That's the latest, or at least that's the latest I've heard that they're actually going to be bringing in. China's going to be bringing in EV vehicles into Canada, where the Canadians used to buy from us. But Trump's pissed everybody off. Not trying to make this political, but that's reality. If you think that this is helping America, you're wrong. But anyway, VXUS has over 7,000 companies outside the US, including Europe, Asia, and emerging markets. And that's all in this fund. And what I like about VXUS is the diversification plus the income. International companies tend to pay higher dividends than US stocks. And VXUS reflects that with a yield that's typically higher than the S&P 500 while still offering long-term growth. So this checks both of my boxes off, right? Checks off the growth box, checks off the income box. Now, from a growth perspective, this matters because the US won't always outperform the rest of the world. VXUS lets you capture growth in global economies, different currencies, and different market cycles without having to pick individual stocks. That's so important to have that type of diversification in your portfolio. And one of the great things I like about this fund is that it's also low cost, passively managed. Passively managed funds are a lot cheaper than actively managed funds. And another good thing is it's extremely tax efficient for a fund of this size. That means more of your returns stay invested in compounding. So you keep more of that return of income. So if your goal is to build income now while positioning for long-term growth, I think VXUS makes a strong case as a core international dividend holding. It's not flashy, but it's reliable and strategic. Again, it's super important to have diversification, definitely in this type of environment. Now, politically, Trump and his administration are talking about America first, and bringing jobs back to America. Whether that happens or not, the way he wants it, realistically, it's going to take time for that to happen. But don't get me wrong, as a traveler to other countries, as a world traveler, I can tell you right now, the rest of the world is not as far behind as you think. America isn't this big time, big dog as you think. The gap between us and other countries are getting smaller, and it's getting smaller and smaller. So you need to understand that you can actually make money by investing in these emerging markets and these European and Asian markets. That's not, I mean, it's a Vanguard fund, by the way. So let's not look at it like, oh, I'm not doing my patriotic duty, because there's people like that. Matter of fact, I had somebody tell me the other day, I was mentioning that I invested in this international stock ETF. He heard the word international and he just shut off completely because he said he was America first. I didn't even know that was a thing. But if you feel that way, wouldn't America first be to make sure economically you're at your best? So if that means you have to invest in a international fund, so be it. It's not like you're doing it 100%. You're just adding a level of diversification to your already domestic portfolio. If you already invest in the S&P and the Nasdaq, why not get involved into some international exposure? So that's it for my video. Quick video. I thank you guys for tuning in. Until next time, peace.